Welcome to Base Space, a crypto podcast. Base Space.
Welcome to the Base Space. For those new, this is a crypto podcast hosted by myself, the Crypto Mewtwo, and also Chase Coins and Super High. And we focus on creating opportunities for growth, networking, and education in the crypto industry. Today we have the honor of having Kain, founder of Synthetix. We're super pumped, man, to have you on the show. Welcome.
Yeah, thanks. Yeah, I'm excited. Should be fun.
Yeah. It'll be a blast, bro. So it's kind of tradition here at the Base Space for anyone new that we bring on the show. We always like to learn how they got started in crypto. So would love to hear your story.
So I guess real quick, I started a payment gateway. It was like basically local payments. You could walk in and buy stuff for cash. And we started working with a bunch of the crypto brokerages, CoinSpot, CoinJar, which is, I think, the earliest kind of crypto exchange / brokerage in Australia. They started back in like 2012. We supported that, and that's how I really kind of got deep into crypto back in 2014.
That's super sick. And how'd you then make your way to actually founding Synthetix and coming up with the concept?
Yeah, so I was the Bitcoin maxi for a long time. I kind of dabbled in, I read that same Slashdot thread that a lot of people read back in 2011 and dabbled in running a Bitcoin miner and stuff. I was one of those people that would build my own PCs and liked getting my hands dirty with all that kind of stuff. And after we launched Blue Shift, the payment gateway, and volumes through 2016 and 2017 really started picking up. I got kind of deeper into the Ethereum community and got really excited about what smart contracts could do. But I particularly saw this stablecoin problem as something that was pretty critical. Obviously at that time Tether was really kind of the only viable option stablecoin wise. And I, like a lot of people, had concerns about the sort of viability of that model in terms of scaling and a whole bunch of other things. And so, I looked at Maker and BitShares and some of the other models that have been proposed. And coming from an online retail background, I sort of had this idea that if you wanted a stablecoin, if you wanted a payment network, someone needed to be paying for the operation of that network. And so the idea was with Haven basically to create this closed loop payment network that people would pay to transact within, which kind of made sense, except implementation wise, it was a total clusterfuck and it just didn't work. And ERC20 tokens that charge fees to be transferred are just not really a viable model. And so, in late 2018, after launching the initial stablecoin and kind of running it for about 6 months, even though the system kind of worked and was stable, it just wasn't that scalable. And so we decided to pivot to more generalized synthetic assets and launch synthetic Bitcoin, synthetic Ether, synthetic gold and silver, and that started to get a lot more traction.
Yeah. We're all super familiar with your work and the tremendous success of the Synthetix and how big you guys have grown. I'm super curious, throughout your time of building Synthetix, what has been your biggest takeaway or biggest lesson that you've learned from building up the protocol?
I don't know. There's too many lessons. I think the thing that Synthetix has done and the community has done really well has been to just kind of continue to operate these iterative experiments, right? So rather than back in the day, go back to even 2016, a lot of the systems that were proposed and designed were designed with this heavily waterfall style software development concept. So basically, Augur is a great example of this, right? design this like perfect system in a vacuum and then go away and like try and build it for like 18 months and then deliver it. And I think that one thing that we did in Synthetix was to kind of challenge that model and say, there's no way for you without market feedback to be able to build something that is going to be optimal, right? And so actually it would be better to start off with something simple and then iteratively modify that over time. And in order to do that, you needed to kind of throw away this concept of like immutable contracts and basically have contracts that could be upgraded. We were probably the first project I would say that really like leaned into that heavily, and kind of made it a bit more acceptable to do like contract upgrades and to have governance and multi-sigs and things like that could kind of modify contracts. Before Synthetix, and even for a long time after we did it, it was just considered not ideal basically to take that approach.
Wow, that's super interesting. I didn't realize that in the past, like people didn't think that was like an ideal solution. That's kind of strange.
Not only did they not think that it was an ideal solution, they thought that if you did something like this, you were a monster. Like you can go back and read some of the Reddit threads, and like we would just get absolutely like raked over the coals for having like proxy contracts and things like that. And even like the proxy contract architecture, back then was like very, very weak, right? There were a few options, like Open Zeppelin had a proxy architecture. We ended up kind of designing sort of our own proxy contracts, which became painful later on. But yeah, like this at a very like fundamental ideological level, this was a huge challenge to this like immutable smart contract ideal that people had been talking about since Ethereum launched.
Hey, Kain, just to like switch gears here and talk more about Synthetix. At a high level, can you talk about some of the products that are powered by Synthetix, like Quenta, the derivatives trading platform?
Yes. So Synthetix as a protocol basically is a kind of a system of debt, right? So people lock collateral in the form of SNX, ETH, and some other collateral assets, LUSD, for example, and then they issue debt against them. But that debt has this kind of cool property where you've got this oracle system that if you're holding debt denominated in, let's say, Bitcoin, you can instantly convert that debt into another denomination, let's say euros. Right. And what that means is that you have this kind of system of assets that are all effectively fungible and can be converted into one another very easily. That allows for you to do some cool things, right? You build like an exchange that allows for deep liquidity between a whole bunch of fiat currencies and Bitcoin or ETH or Litecoin or whatever. When we launched the protocol initially, we were the ones who had to kind of design the front end system. So we had multiple attempts at designing this like front end exchange system. But the reality is that like building a protocol as complex as Synthetix and building like a user experience and onboarding process and interfaces and all that stuff is kind of incompatible. And so we actually decided, probably going back like almost 2 years ago now, that this was just not the optimal solution. And so we spun out Quenta as a way of effectively allowing for someone else to kind of have the primary role of like building the user interfaces, and for us as the Synthetix community to just focus on the protocol itself and delivering the contracts and all that sort of stuff. So that's where Quenta emerged out of. But then there's been other protocols like DHedge that take advantage of some of the Synthetix properties to allow for like decentralized fund management, which has been a challenging problem for a while because you don't want your fund manager to rug you. And so Synthetix gives you the ability to like ensure that a fund manager can't take fund or make some poor trade or whatever. More recently, with the launch of Optimism and the transition of the Synthetix contracts to Optimism, protocols like Lyra, which is an options protocol, have emerged, which essentially Lyra is this options protocol that internally hedges the exposure of all of the options traders within the AMM against the Synthetix protocol. So, there's even more cool kind of use cases that are starting to emerge from having some of these like Synthetix properties that I described earlier.
And what would you say from like a user perspective is the most like I guess like the most appetizing asset or synthetic asset?
Yeah, so I guess it depends on the use case, right? For traders, I think it still tends to be the large cap assets, but there are a number of other use cases that have emerged. For example, like Curve cross asset swaps. So one of the amazing things when Curve launched was this like deep liquidity between sort of semi fungible assets, right? Like different wrapped implementations of Bitcoin, for example, right? Or different stable coins. And so Curve created this hugely deep liquidity pools for all these different assets. The problem is that they're all siloed. And so, you could trade $50 million worth of USDC into DAI with minimal slippage. But if you wanted to go USDC into wrapped Bitcoin, you would have to go back to Uniswap V2 or something like that. And what Synthetix and Curve were able to do, working with like Andre and Anton and a bunch of other people in the space, was to build kind of a bridge between these Curve pools to leverage the Synthetix kind of synth fungibility to create bridges. And so that today remains like one of the biggest use cases of synths, and a lot of the trading volume comes from those transactions bridging Curve pools where people are doing like $25 million wrapped Bitcoin into DAI trades, for example.
Okay, that's super interesting. And then also, I was curious about this partnership with Gauntlet and how they'll be helping Synthetix with the risk management. Could you touch a little bit on that as well?
Yeah, so Synthetix is obviously a very complex system, and over time, many different people within the community and external contractors and other people have kind of helped to try and model the system and understand where the risks are. I think Gauntlet is probably best positioned, given the work that they've been doing for years now, going all the way back to like the original compound analysis. I think was like one of the first major projects that they released. They're in a very, very good position to analyze complex smart contract systems. And so, we tried a few different times to like work out a way to kind of get Gauntlet to be able to do an analysis of Synthetix. And I think we finally like found a model that works, and we're super excited to be working with them and getting them more deeply integrated into the community and the ecosystem.
Perfect. And just like my last question before I pass it on to Chase, and this spun up just because of recent events, probably the past year, how Synthetix adjusting for the raising inflation rate against the US dollar?
I don't think that Synthetix has any, particular kind of idiosyncratic risk there. If that makes sense, I think like the macro sort of conditions that we've been watching as a lot of crypto has sort of responded to rising interest rates and interest rate volatility is kind of the same thing for Synthetix. I think particularly the SNX token. So as we've kind of switched risk off, one of the challenges with Synthetix is that SNX is the primary collateral. And so if the SNX price is low, the bandwidth of the system is constrained. We do have other collateral forms, things like ETH and what have you that do kind of augment this, but it is still kind of a limiting factor. So I think that's probably the only impact that we see directly. But obviously indirectly, there's a bunch of macro impacts that Synthetix, like other crypto assets, is exposed to.
Kain, you had mentioned you had kind of briefly touched the topic of utilizing oracles and how that opens up interesting use cases earlier. Could you kind of touch on how Synthetix is working with Chainlink currently?
Yeah, so we've been using Chainlink exclusively, I think, since like late 2019. Sorry, actually, it might have been that we started, I think, initially with like forex currencies, and then we transitioned. By 2020 we were exclusively using Chainlink. So it's been a couple of years now, where Chainlink has run all of our price feed oracles, and I think that for most people that's what they know Chainlink for. Obviously, in the last year or so, Chainlink's gotten into other forms of oracles, keepers, and things like that, but we've now kind of deepened the relationship where Chainlink has built some bespoke oracles for us, which are going to enable like cross-chain messaging between the various Synthetix systems. So something that's coming up very soon is this idea of merging the two debt pools between Synthetix that's running on L1 and Synthetix that's running on L2. And Chainlink has basically built the oracles that will allow for that merger to happen, that synthesis. Gotcha.
And I believe you had a pretty base conversation with CLG during ETH Denver around CCIP. I was wondering if you could kind of expand on that conversation, or just how Synthetix is potentially thinking about using CCIP in the future.
Yeah, so I think right now, until CCIP is sort of production ready, what we've been doing with Chainlink has been kind of building bespoke oracles, which is great. We're lucky to be in a position where Chainlink appreciates us enough to kind of build bespoke solutions for Synthetix. I think it goes back to obviously the kind of deep relationship we've had. We were the first users of Chainlink on mainnet. But that's not a scalable approach. So we do need like a more generalized solution, because as we expand to other networks and you have kind of higher demands in terms of the various forms of information and messaging that we need to be sending across networks, we just need the generalized solution. So for now, we've got a bespoke solution, but I think eventually we'll transition to CCIP for everything. And obviously, Chainlink God was very friendly enough to come and walk us through like the latest of where that's up to and speak to the engineering team, which it sounds like it's coming along really well, and we're obviously very excited for it. But in the interim, we've got the oracles we need.
Nice. Yeah, I love that you guys are getting all the support that you guys need. I'm actually curious, like, I know for a bit of time there you were having some strife. I think it was late last year with other L1 communities. I'm just curious, like, with CCIP, right, you can have this cross-chain interoperability protocol. So have you guys already kind of identified other chains that you guys are looking to launch on?
I don't think we have. I know that there's a proposal out there to launch on Polygon, which would probably be the first. So if once we finish the debt synthesis, Chainlink is happy to kind of deploy these bespoke oracles for us, then that kind of deployment to Polygon would become possible. One of the cool things about the way that we've designed the system is that once the debt synthesis happens and once Chainlink is providing this cross-chain sort of bespoke messaging system for us, we will be able to deploy what we're calling Synth Teleporters. The cool thing about Synth Teleporters versus other bridge solutions is that you basically inherit the same kind of security properties as you do with the existing Synthetix system. So it doesn't really increase the attack surface too much. And what that means is that if you are holding on, let's say, Optimism, $25 million worth of SUSD, you would be able to get that SUSD directly onto Polygon within, a few blocks, let's say. So, call it a minute or so, and wouldn't be limited in terms of, the liquidity that you can get off through like other bridge solutions that are out there in terms of fast withdrawals. So that's cool. Obviously, being able to move large amounts of synths between, Polygon or Optimism or Arbitrum or L1 or whatever is really nice. But if you go back to the point I made about Curve, then you get this really interesting situation where if the synths are bridges across networks, you can start to do cross-asset swaps. So you could, for example, have a bunch of USDC on Optimism, go via Curve pool from USDC into SUSD, use the SUSD via Teleporter to get onto Arbitrum, let's say, and then convert that SUSD into let's call it synthetic Bitcoin, and then go into a curve pool that has synthetic Bitcoin and wrapped Bitcoin and end up with wrapped Bitcoin on the other side. So you can do these like multi-hop trades that, you know, might take maybe a couple of minutes to settle. But right now, you know, moving, let's say $20 million worth of USDC between, you know, Optimism and Polygon as an example, and simultaneously converting it into wrapped Bitcoin is basically impossible. You know, that would take a number of trades. You'd need to like wait for arbitrage and liquidity or whatever. So this is going to be, you know, obviously a game changer in terms of like, you know, cross-chain arbitrage. And I think the networks themselves will start to get significantly more efficient once this is all rolled out, you know, in the next like month or two.
Gotcha. Did we lose Kain?
I'm still here.
No, he's still here.
Oh, okay. Okay. So
I think his Wi-Fi is. I think his connection is just a little laggy.
Oh, is it? Oh, sorry, guys. Okay.
No worries.
No worries. So if I just kind of want to summarize what you're saying. So the with teleporters, you don't really have to factor in having liquidity size on other chains, and then also you kind of get the security guarantees of like the core using like ETH L1 chain, but you can kind of use these assets in other ecosystems. Did I hear that right?
Yeah, that's essentially. So basically, if you trust synths, right? If you trust holding SUSD, then you can, you know, take advantage of these teleporters to get that SUSD wherever you want, which means that you can then do, you know, cross-chain, cross-asset swaps and all kinds of, you know, interesting composable trades, which, you know, will significantly increase the efficiency of arbitrage across these different networks.
Gotcha. Okay, and that's super interesting. So is that part of the universal bridging token service, or is that just within Synthetix smart contracts that you can have that?
This is within the Synthetix smart contract. So this is kind of the interesting thing about synth teleporters versus like a universal bridge or something like that. And just let me know if my internet's choppy. I'll try and see if I can get to a better place. But basically, you have this issue with bridges, or you have a number of issues with bridges. But one of the issues with bridges is, let's say you're bridging L1 to some new chain, right? And you've got wrapped Bitcoin, right? And a bunch of different people want wrapped Bitcoin on this new magical chain, right? And so you have all these different bridges that are competing to wrapped Bitcoin on L1 and get it over to the other chain. And then you've got kind of competing implementations of this version of wrapped Bitcoin, right? Wrapped Bitcoin squared, if you will. And you kind of lose fungibility, you lose liquidity, it's less efficient. There's a whole bunch of problems with it. If you use synths, you don't need to worry about wrapping the asset and storing it on L1 because the Synthetix contracts have the ability to mint and burn synths arbitrarily. You just burn the asset on the network that it was initially, you know, originating from, and remint it on the other side. And there's no, you know, liquidity stored in a bridge somewhere on some other chain that you need to secure. The asset itself is just completely destroyed and migrated to the other network. Hence the idea of teleportation, right? You know, teleporters work by killing the person on one side and then remaking them on the other side, right? And that's how the synth teleporters work.
Very, very cool. Kain, I kind of wanted to touch on a little bit of regulation with you. I was curious, like, around your thoughts on like the future of regulations for synthetic assets, and yeah, like what are your general thoughts on what the future lies for these type of assets?
I think that there are various different asset classes which are more or less triggering for regulators. So, you know, things like gold, for example, there's so many different implementations and exchanges that are trading paper gold and what have you. I think the idea of like a synthetic gold token is just not you know, hugely problematic for regulators, and you know, it doesn't seem to trigger too much of a response. I think when you get into things like synthetic versions of equities, FANG stocks and things like that, that's when regulators start to get a bit more concerned. And obviously we've seen that happen in a couple of instances over the last couple of years. So I think the big question for the synthetics community is like, where is the optimal kind of trade-off space between potential regulatory concerns from issuing a certain synthetic asset and how much volume and interest it's going to generate. The interesting thing is we actually had synthetic equities on L1 for quite a while, and the trading volumes were very low. And so they were actually purged alongside a bunch of other assets that had low trading volumes and haven't yet been reissued on Optimism. So there's kind of this open question that the community needs to work through, which is like, does it make sense to have synthetic Tesla on Optimism if it's not really going to be traded? I think people have this intuition that like synthetic equities are super exciting and everyone's going to love them. But I think we've tested out a few different times now within the ecosystem this thesis, and other than for like the purposes of yield farming, I don't think we've seen like a huge amount of demand for trading synthetic equities yet. Now maybe that changes if you have like synthetic options, for example, right? So if you have like a synthetic Tesla and then an options protocol like Lyra can issue puts and calls on that synthetic Tesla, or maybe there's like a futures or a perp sort of instrument that allows you to get 10x leverage on that, then maybe that changes. But I think that's still a thesis that is a bit uncertain based on what we've kind of observed in terms of spot trading of those assets.
Oh, okay, interesting. Is your team involved in like lobbying or educating politicians on these type of synthetic assets or just crypto in general?
So there's no one specific within the synthetics community. So we don't really have a team anymore, right? We have contributors that are paid by the DAO that are paid a monthly stipend. So I think this is something that a lot of people are not super familiar with in terms of how Synthetix operates. So Synthetix used to be an open source software foundation that was dissolved in 2020. So almost 2 years ago now. And the protocol went to a pure DAO. There are now like 4 or 5 different governing bodies within Synthetix that are elected by token holders or through various means that govern the protocol. There's a grants council, which would probably be best positioned for kind of lobbying and those sorts of efforts. To date, I'm not aware that they've funded any grants towards lobbying specifically, although I do know that the Grants Council, funds a bunch of things, and it wouldn't surprise me if there was something that kind of touched on like educational lobbying or what have you. But I mean, we got the DeFi Education Fund. I think Uniswap did us all a favor and spent a bunch of money to send some people out to Washington to lobby on our behalf. So, we can thank them for that. Assume that you believe they're doing stuff, which I tend to believe. I think they are actually doing stuff. They're maybe just not the best at communicating what they're doing.
Yeah. It's possible they could also be doing stuff on their own outside of the DAO as well. Yeah. So yeah, very, very cool. I was also interested in like hearing your thoughts on like President Joe Biden's recent executive order, directing agencies across the federal government to coordinate efforts to kind of gauge like the benefits and risks of cryptocurrency. Like, what was your kind of initial take on the announcement?
I think the reality of U.S. politics is that, and I grew, like full disclosure, I grew up in the U.S., but I'm Australian. That's why my accent sounds weird. And I've spent probably like half my life in the U.S. So, I'm by no means an expert in U.S. politics, but I've had a lot of exposure to it in my life. And I think the reality of U.S. politics is that there are a whole bunch of conflicting actors that need to kind of coordinate to come up with any sort of coherent policy. And I think with something like crypto, which is as kind of wide ranging as it is and touches so many different areas, it's hard for anyone to kind of come up with a coherent policy. I think there was maybe a sense from a lot of people that some of the regulators that were going to be appointed by Biden were going to be more crypto friendly than they turned out to be, and I think we kind of got rugged a little bit. But that said, my view over the long term, like ignoring any specific particular person within politics, whatever, regardless of the country, is that like crypto is, and particularly DeFi, is long-term incentive aligned with what regulators want. Like regulators want like efficient markets, they want fair markets, they want transparency, all of the things that regulators want and work really hard to get in the TradFi markets are very accessible within DeFi. Which doesn't mean that DeFi is perfect. Obviously, there's a lot of things that DeFi, globally and could do better. But fundamentally, the technology is there. And I think that fundamentally, it's an improvement over a lot of how TradFi operates. When you're constantly trying to balance counterparties against each other and ensure that markets are operating efficiently, and then you can replace that counterparty risk with like very deterministic and transparent rules that are kind of governed by a smart contract. I think that you just get a more efficient market out of that. It's going to take time for that transition to take place, but I do think that over time the kind of narrative will shift, and that regulators and politicians and other people that are obviously much more familiar with TradFi will become more familiar with DeFi and become more familiar with crypto, and it'll become less scary. And I think it'll be seen as a tool, and similarly to what happened with the internet, it'll be seen as a tool that is kind of net positive for society. But that process is just going to take time, and it's going to take a while to play out.
Kain, I think we're losing you again on your connection.
I think I lost him.
It just went out at the end there.
Yeah, sorry guys. Let me try and move again. I was trying to connect via 5G, but Twitter Spaces is not accepting 5G as a valid connection, unfortunately. How are we doing here?
You sound good.
Okay. All right. Cool.
Kain, you had touched on a really interesting point I wanted to circle back to around. We kind of were hinting at this, but basically, as more and more financial data comes on chain and that data becomes more and more visible, I'm actually curious, like, do you think the odds of us having very large financial recessions or kind of financial collapses gets kind of arbitraged out? The way I look at it is, in this new paradigm shift, you're going to have real-time information known by all counterparties to where they can arbitrage out any risks that may be popping up, and it'll become a much more efficient market. And so I'm curious, like, just kind of from a 10,000 foot level, what are the like philosophical views that you think that has for like a global economy?
I think that markets tend to get more efficient over time, and I think that as we kind of introduce new tools, the internet obviously being kind of the most recent transformative one, that we end up with more efficient markets. Obviously, crypto has the power to be even more efficient, I think, than the change that was kind of brought on by digitization and the internet. But it's going to take time because you're going to have to transition a whole bunch of legacy markets to this new platform. So I think the kind of transitional period could create a situation where maybe you have even more volatility than we kind of have now, but eventually you find like a new stable equilibrium.
Gotcha. Yeah, I know we're running short on time, so I just want to pivot real quick to talk about some of the future of Synthetix. Could you kind of expand on the futures launch that's up and coming? Like, what are some of the details that we can kind of expect to see from that and the timelines?
Yeah, so the most recent update that I read was that futures is probably going to launch tomorrow, I think. So we're like maybe 24 hours or 36 hours out. Don't quote me on that though, because our releases tend to be a little bit flexible. But I'm pretty confident it's coming out, in the next day or so. It's going to be, I guess, like a beta launch. So we're going to have open interest caps across markets to keep like the total open interest below about 50 million, like globally. So I think it's like 20 million and 20 million on BTC and ETH. And then about 2 million on Link, which is the third asset that will be tradable. And then, once we've got some empirical data about, trading and how kind of the interest rate funding mechanism that we've built works in practice, that, we'll tweak some of the parameters and start to scale it up.
Gotcha. And then kind of just staying on the topic of, future drops and the roadmap, is there anything on the roadmap for 2022 that you're most excited for?
So I think once Futures launches, and once we start to roll out a wider range of assets, so there's a bunch of new assets that just launched on Optimism, thanks to Chainlink. We'll have a range of different assets that are tradable within Futures. We'll have futures for things like Solana and Uni and a whole bunch of different assets, which I think is going to be really cool. Post that, the next biggest change that's coming is this transition to Synthetix v3, which is a completely new architecture, new platform. All of the existing components of the system are going to be redesigned. So it's going to be a much more efficient system than it is today. And we're going to have a number of different kind of features and things that we haven't been able to build in the existing system. So, we might have like exotic assets. So for example, right now, if you don't have a deeply liquid market that you can pull an oracle out of, you can't support it within Synthetix. But within Synthetix v3, it might be possible to kind of bootstrap liquidity for more exotic assets, and we'll be able to test out things like, a Bitcoin VIX synth and all kinds of other cool things that just hasn't been possible previously, because you might not, if you don't have an oracle for it, then it can't be supported in the current platform.
You kind of answered all my questions, Kain. Super, Chase, do you guys have any more questions for Kain?
No, I just wanted to say thank you to him for coming out and taking the time out of your day to talk to us.
Yeah, plus one to that. Got all my questions answered, and props to you for hopping on this space after traveling from New York to Australia. That's quite the leg.
Yeah, it was definitely a trip, but I'm kind of used to it at this point, to be honest. So yeah, I mean, thanks for having me, guys. It was really fun. Apologies for the internet. I'm not sure what's going on there. Got to go check my router. I actually should probably, even more importantly, I'm just looking underneath my my data cabinet at my ETH2 rig and noticing that the power's off. So I'm probably getting offline penalties right now as I speak. So I better go and do that after I get off this call and go and fix it. My ETH2 staking woes continue.
Wait, Kain, I actually have one more question. How real is the brother rivalry between the four of you?
Pretty real. I think Kieran was literally just trolling me this morning because I missed out on some deal, on some new game or something, and he asked me if I got an angel check-in. I said no, and he said I was NGMI. So yeah, it's pretty much a constant battle.
That's so funny because Kieran said we would never get you on the show.
That's hilarious.
Yeah. So now we got 3 out of the 4 on.
Yeah, nice, awesome. I guess now it's gonna depend on how many listens each of them gets, I suppose, right? I'm sure he'll be trolling me if this doesn't get as many listens as his appearance.
We'll keep it on the download. We'll keep this. We won't share out too many stats about who got more downloads or views.
It does probably explain why he's not here. He's trying to keep the numbers down as low as possible.
I think I lost him at the end there. But Kain, really, really appreciate you just coming on and chilling with us. It's super cool. You're always welcome back anytime on the space, and we appreciate the opportunity, man.
Yeah, awesome. Thanks for having me. Maybe we can follow up after we get some data about futures and see how it's performing.
Yeah, for sure. Let's do it.
Awesome. Cool. Thanks, guys. Thanks again for having me.
Absolutely. Stay based, everyone.
Stay based.
Peace.
Based space.